Hi folks, Steve Ryan here from Stephen Accounting. So you're starting your own business? That's pretty cool. Thought I'd do a few quick videos on the most common questions and situations that come up. I live and breathe this stuff, but I'm only going to be scratching the surface. So if you want to know more, leave a comment, send me an email, and I'll get back to you. Today's video is on GST. First we'll kick off with the basics. You need to register for GST when you think you'll earn more than 60 grand of turnover in a 12-month period, but you can choose to register early, which can be a great choice if you've got lots of startup costs. You can choose between filing a GST return every month, 2 months, or 6 months. In most situations, 2 months is best because it means you're not pressured with filing every single month, but equally, accounting for 6 months worth of trading can become a really big job. There's really only 2 different types of accounting bases you can pick. Nobody uses the hybrid method because it takes the worst parts of the other 2 methods. So, that leaves you with payments or invoice. Payments basis means that you account for GST based on the date that the money actually changes hands, while invoice basis means you account for GST based on the date of the invoice. So, if you were to send an invoice on the 31st of March and a customer pays for it on the 1st of April, then, under the payments basis, GST would be accounted for in the April-May GST return, while under invoice basis, the GST would be accounted for in the February-March GST return. Most small businesses use payment basis because it aligns with the timing of the payment. Next, we'll talk about what you can claim. Most of the time, it's easy. Just claim back the GST you charged on goods and services you buy and use. But if you're importing, buying from a non-registered supplier, have a private use component, or are buying something on finance, then things can get a bit trickier. If you're importing, your supplier might charge GST, but probably won't, and customs probably will charge you GST, and you can claim that back. If you're buying from non-registered suppliers, then they won't charge GST, so there's no GST to claim back. However, there is a carve-out for second-hand goods, so if you're buying something for the business from Trade Me, then you can claim GST on it. If you're buying something that's both business and private, and it's over $10,000, then you'll need to split your claim based on how much is business and how much is private. If it's below $10,000, then you can claim all the GST if the principal purpose is for the business. If you've bought something on finance, then you can claim the GST on the cost up front. This can be quite tricky to do in your accounting software because there won't be a transaction to start off with, and there's financing fees and interest which may be included in the price which you can't claim the GST on. Well, the paperwork requirements were slightly relaxed from the 1st of April 2023, just to recognise how modern business is done. The new rules are more flexible than the old rules, so if you've got old invoicing practices, then they'll still comply with the new rules. In the bad old days, if Inland Revenue asked, you'd need to produce a physical document with a laundry list of specific criteria to support your claim. But now, things like invoices, bank statements, supplier agreements, and contracts can be used as support for the GST you claim. There's also new thresholds to consider: $200, between $200 and $1,000, and over $1,000. For $200 or less, your bank statement is sufficient evidence, meaning you don't need to worry about keeping every receipt or invoice you get in a shoebox somewhere. When it's over $200, you'll need an invoice or receipt that shows the GST amount you're claiming. But what do you need to put on your invoices? From a purely GST perspective, if the amount's under $200, you don't need to issue anything. If the amount is between $200 and $1,000, then you need to have your name, ID number, the date, a description of the goods and services, and the amount of GST you're charging. If the amount is over $1,000, you'll also need to add in the name and the address of the recipient. But address is now much more flexible than it used to be. It could be a New Zealand business number, a website, email address, or phone number. If you've got a GST question, leave a comment, send me an email, and I'll get back to you.